I get the question all the time, Felipe, what's my mortgage rate? What's going to be my mortgage rate? Or what rates are you offering me? Or what rates can I get? The obvious and always answer to that question is the rate you're going to get is not the rate that we're giving you. It's the rate you qualify for. So there are 5 factors, 5 things that affect the mortgage rate. So first of all, you need to understand that these 5 things will affect your rate. So the type of program that you're using for your loan, or the type of loan you're financing your house or refinancing your house, that will determine the mortgage rate. Especially like, for examples like FHA loans, which have really low rates. And then you can go up to non-QM loans, which have higher rates. And kind of based off where rates go up or down is mostly has to do with the documentation requested. So the more docs you're sending in, the less the rates are going to be. And the less docs you're sending in, the more the rates are going to be. So rates do depend on the type of loan you're applying for. And especially like if you're buying to owner occupy or if you're buying to invest. So that's number 1. Number 2, your credit score. Your credit score is the biggest factor. Actually, your credit score qualifies you for the loan. It gives you opportunity to get the finance. And then obviously that will give you the rate. And usually credit scores, as you all know, it's 3 bureaus reporting 3 credit scores. Lenders will use the mid score. A lot of people will text me like their app. It's like, hey, my credit score is 700. Credit Karma told me this, and all of a sudden we pull it. The FICO is not really what you said. So just keep in mind, the apps you have, they simulate that, and that's not really accurate. When we pull the FICOs, that's going to give us the credit score. And always use the mid score. That's what lenders will use. So it's not the lowest and not the highest, it's always the mid. So it's important to have a 3 credit score, good average, good score to make sure you're qualifying well. The other big factor here I want to point out is your down payment. Obviously, if you put more down payment, you get a little better rate. Because why? Translating to risk. You're eliminating risk, the lender is going to give you a better rate. Obviously, if you're going down the term, like if you're going to 15 years, a lot of difference on the rate, so big cut there. And the economy. I mean, we just had a nice rate cut in February, and all of a sudden war broke out. And guess what? The rates climbed back up. Worst nightmare for all of us here in the mortgage industry because it affects the rate and the economy and the market. I mean, there's a lot of stuff we can go on here. That'd be a totally separate video where I can talk about where the economy affects the rate. But yeah, your economy will affect your rate. Sometimes you qualify for one rate, and then all of a sudden these changes do bring an effect to your rate. So keep in mind the economy affects it. The time frame of the loan. So if you're getting a 30-year loan, one rate, 15-year loan, I think I said that before. It makes a lot of sense that when you're saying, hey, I'm going to borrow money for 15 years, the lenders are going to give you a better rate. They're going to give you something that's a little more lower than what's compared to a 30-year. Just wanted to share a few pointers here. Remember, when you're calling your loan officer, hey, what rate are you offering? That's not the right question. Is what rate do I qualify for? And then for us to answer that better, we need to go down to all these 5 different things and different questions and different programs and different documents we're going to collect to give you the right rate. Give us a call today if you're trying to get the best mortgage product. You're trying to qualify. You want to, know what you qualify for, what programs are available for you. Give us a call. We'll be happy to help you. Thank you.